Hey guys, welcome back to our weekly live event where we talk about personal finance, investing, business creation, and retirement planning. It's great to see everybody again. And in a few seconds, we're going to start our weekly Q&A and be good to go. So we're going to give everyone a second to jump on and we'll start. How's everybody been? How's our week? All right, guys. Good to see everybody. Let me know how the new setup works, the new mic. Everyone's coming in clear. What's up, Jorge? What's up, Elias? Good to see everybody. Hopefully everybody's been safe during this Corona crisis. What's up, Powell? Powell says, "Do I think the Florida market and the U.S. market will crash?" I think so. What's up, Frank? Frank says, "Hey, from New York City." Wesley says, "It sounds good. Awesome." What about you guys on YouTube? How's the volume coming? How's the clarity of the new mic? This thing is sick, right? This thing's pretty sick. I got a new setup. So we're going to go through the Q&A, or actually we're going to go through topics regarding the current market condition, and then we're going to go into the Q&A. Max and Jason, I've had these glasses for a minute, so I just don't always wear them. Candy Apple says, "Great, awesome. I'm glad. This thing's nice." Amelia, what's up, Amelia? What's up, guys? All right, thanks for all the love. Appreciate the thumbs up, the hearts. Actually, I've been so cool new info. I've been working on the class you guys have been asking for, so I've been spending time on that. It's taking forever, but it is it's coming along. So we should be done with it by the end of the month. And actually, probably next week, I'm going to start pre-sales. So I'm going to offer like major discounts for the course, and it's going to be great. Talks about credit, tax returns, savings, finding your first deal and closing on your first deal. And the bonus section is mentality and thinking. So that's going to be coming out soon, and offer like huge discounts on it because it's the first thing I ever made, and you guys really asked for it. So I was like, okay, let me make it in and make it affordable. So what do I think of sports cards? Actually, I collect cards, sports cards, Pokemon cards. Collectibles are a good investment, but just like in any investment, you need to know what you're buying. You can't just buy anything. You know, you need to know what you're buying. You can make good money off of it. What is it? Edition 1 Charizard is worth $20,000 in perfect condition. It's crazy. Yes, I do have Pokemon cards. Awesome. So we're gonna get going. We're gonna start it up. So guys, it was great seeing everybody again. Obviously, I'm Pascal Corcus. This is my weekly live event where we talk about finance, investing, retirement planning, business creation. So if you have any questions about taxes, credit, investing, I'm happy to help here for you guys. So now, so far today, the stock market went up about 2 to 3%. And in my opinion, I think that's crazy. I really think it's crazy that the stock market went up despite everyone's been staying home for weeks now, if not some states for almost 6 weeks. So it's been a very long time that people have been staying home. They have not been earning their income. There's a lot of underlying like foundational things wrong with our economy, and the stock market went up. Now I get it. Q1 results were better than expected, but that doesn't mean that Q2 is going to be better, right? It doesn't make any sense to me to say that the market should be going up at the pace that it's going up now. You know, with things the way they are, within Florida, we should be closed for at least another 2 weeks to 4 weeks. In New York, they're planning to be closed for another um, month. It doesn't make any sense that the economy should be getting better. I'm actually going to be buying more gold because I think gold's going to double. Personally, I think gold's going to double, and I'd prefer to buy gold and not watch the stock market and worry about it. I know it's going to be strong for the next few years because people are going to be running from currencies because they're afraid of how currencies are going. They're going to be running from assets, and gold's going to go up because it's a safety play. A lot of people, when they're concerned, a lot of old school investors, they get out of the dollar, they get out of the stock market, and they run to gold and they start picking up gold and silver. Now, the price of gold and silver on the market today does not truly reflect the true demand. Because if you go, you can buy gold stocks and you can buy, everything online. But if you try to go to a place to buy physical gold, right, you cannot find any physical gold to purchase. There isn't enough to meet the demand. So there is a difference between what's happening on Main Street to what they show on Wall Street. And that's the same issue that I'm having with the fact that right now on Wall Street, it's showing that the stocks are doing great, but on Main Street, people are still suffering. So because of that discrepancy, I think really we're going to have a big shock to come over the next few months when people start seeing the cause, the financial pain that's caused by the coronavirus. So that's why I'm still not, long stocks. I'm not a buyer of stocks. I don't feel that they're truly priced. Now, do I think some of the companies have underlying value, right? Like I like Disney, I like Google, I like Apple. They do have very strong underlying values. But do I think the current price of the stocks reflect the current market condition? I don't think so. So that's why um, I'm not buying any stocks. I'm being careful. I'm watching the real estate because I'm waiting for when that dip happens. I can jump in and buy those deals. And I buy one good deal, it'll make up all the time that I would have wasted trying to day trade. That's my personal opinion. And that's why I don't really waste my time day trading. Let's jump into those questions. All right, first question. Gwen says, very much so question. Go ahead with your question, GWAG. So BAR is a gold ETF to look into. Thanks, Powell. Good. BAR, BAR. All right, Powell, what do you know? When do you know is the dip? So I don't know when the dip is going to happen, right? But I do know that there should be, I'm forecasting a second dip. I think that there's going to be another drop in the market, that there isn't fundamentals to justify this rise. I don't think that it's going to last. I think it's going to dip again and it's going to go down. So when I can't forecast the future, right? But what I do know is fundamentally this doesn't make any sense. So I think it's going to go down. I think a lot of people are going to be losing their homes. I think a lot of businesses are going to be losing their businesses, and landlords are going to be suffering as well. I think hotels are definitely going to suffer. So I think it's going to be a great opportunity to pick up these properties. Airbnbs are going to suffer greatly as well. So there's a lot of opportunity to pick up in special niches. So any area that's heavily Airbnb, they're going to suffer. Any hotels, they're going to suffer. Any place where they have amusement parks or entertainment, they're going to suffer. Vegas, the Vegas is basically shut down. Nevada is basically shut down. The whole state is going to suffer because basically the whole state is entertainment. So you're looking at certain areas are going to suffer more than others, which is going to create opportunity. Texas and any market that is heavily oil reliant, like Texas, it's going to go down significantly because when oil is under 45 a barrel, it is a struggle for the American producers to make money. In the Middle East, they can produce oil very cheaply. In Russia, they cannot produce oil that cheap. In America, we cannot produce oil that cheap. Especially for fracking, it's expensive to produce oil compared to how easy it is for the Middle East. So a lot of these businesses, these oil producing businesses, they're going to go down. So Nevada is going to be hurting. Texas is going to be hurting. And these companies took on a lot of debt to produce the oil because it's not cheap to produce this oil. They took on a lot of debt, and all of that underlying debt is going bad. So there's going to be a major crisis in the oil industry in the sense of these companies falling. So the other thing I'm predicting that after they stop pumping and the reserves get used up, I see oil prices rising significantly in the next 2 years. So I see oil definitely going up because now there's less people producing. They basically killed the competition. They all went bankrupt. And then what happens is in the financial world, no one's going to lend to people opening up an oil company for a while. So their competition is not going to come back for a while. So I think definitely that oil is going to go up as well. So be prepared for that. Be prepared for to be able to opportunity to buy all of these assets that are going to come up as a discount. All right, guys, we got a question here. All right, so Brad says, due to the pandemic, do I buy now or wait? I think that you should wait. I think you should wait 9 to 12 months before buying. Now, again, as I always said, the market doesn't matter. If we're on an uptrend, a downtrend, sideways, it's always about the deal. So if you have an amazing deal, you buy it. So if you don't have an amazing deal and you're getting somewhat close to market or only a little bit below market, I predict at least a 10% drop, if not a 20% drop in real estate prices. So if you're not getting a sweetheart deal, if you're not getting a sick deal, wait, because you're going to get great things are going to be coming for those that wait and are patient. Great question, Brad. I get that question often. So I got a next one from Chi and says, when do you think is the best place region to invest in property? So I like Florida. Over the next 10 years, many people are going to retire and move to Florida. So we have a long trend of property values going up. I like Arizona. I like Texas. They usually have landlord-friendly laws, so you're kind of safe on you're owning the assets, right? And evictions aren't like New York or New Jersey or California, where it takes someone like 9 months to evict somebody and hundreds or tens of thousands of dollars. In Florida, it's I pay a lawyer to do it for me. Between the lawyer and the court costs, I'm paying like $550 to evict somebody. So in addition to that, I mean, it's three weeks to evict somebody. So it's not hard. So that's why I like these states. All right. Again, if you're planning to invest in Texas or Nevada, understand that in the short term, they're going to suffer. But in the long term, you're going to have a lot of upside potential. Let's see the next question here. So I got a next question here from Kevin. Kevin says, what do you think about investing in Washington, D.C.? So when you're investing in a liberal state, understand that it's going to be mostly in a tenant favor. The laws are going to be in the favor of the tenant. 2, normally the return on investment from rent is going to be less. It's not going to be as good compared to other states. So like in New York, DC, LA, San Francisco, the return on investment, your cap rate is going to be very low. So to cash flow is going to be harder. Now, again, if you have a great job that pays you very well, then you might not need cash flow and you really only are buying for appreciation. So that is an option. You can buy just because you believe the property value is going to go up significantly. So it depends your strategy. But if you're looking for cash flow in addition to appreciation, it's usually difficult to achieve the returns that we're able to achieve in Florida, Texas, Arizona, in Washington, D.C. I got a question here on Instagram. It says, do you have a real estate license? I do not have a real estate license. You don't have to have a real estate license to be a real estate investor. I've actually been doing this for 20 years, 15 years with my own money, and I don't have a license. To be a good investor, you must be educated. So I do know a lot, and I know a lot more than most realtors because there's tens of thousands of realtors in Florida. Almost none of them close any real estate deals. So you just because you have a license does not mean you're educated. When you get a license, you are book smart, but you don't have real world experience. And that comes from actually doing it. And it comes from working for someone that's actually doing it, right? So you need real world experience. You need practical, knowledge. So that doesn't come from a book or a license. Fishy says, how long did it take you to obtain financial freedom? It took me 4 years. It took me 4 years. So I started investing when I was 19. By the time I was 23, I had 23 units. And the income I was producing from the 23 units was equal to what I was making at my job. So normally financial freedom means the second you have enough money coming in from your rental properties that can make you that will allow you to quit your job. So I achieved that at 23. Now, what I decided to do was continue working and bring in money and then open an accounting firm, open insurance agencies, and do those other things to constantly bring in money because things happen, bad things happen. So what I do is I made sure that I have multiple cash flows, multiple sources of income. So I bring in money from my accounting firm, my insurance agency, from the rental property, from flipping property. I bring it in from multiple sources. So in case anything happens, I have something to fall back on. So that's why you want to have multiple sources of income. So you are not relying on one thing. And in case anything goes bad, you're not panicking. So that's when I obtained financial freedom. All right, let's go to IG. Got a lot of questions on IG. Are you going to guest people? Yes, I can add guests. All right. Next question is which state, okay. So which state is the best to rent out and make some money? So there's multiple states that you can rent property and make a good income. Now, just because you bring in good cash flow does not mean you'll get good appreciation. So you have to focus on, do I want cash flow or do I want appreciation? So there's many states, and within each state, there's many sections that will give you great cash flow. That doesn't mean you're going to get appreciation. And as I've taught you guys in the past, appreciation is really how you build your wealth. You can do it aggressively, kind of like where my format is a little bit more aggressive, or you can do it a little bit more conservatively, but then again, you're not going to gain appreciation that quickly. You're going to have to wait 10 years before you get your appreciation, where normally I get my appreciation within 2 to 5 years. And that's where you make your big money, is appreciation. Tasha says, I'm taking a 75 course online through Real Estate U. When I'm done, what's the best way to get myself out there? You need to go to meetup events. Real estate is a people person business. So you need to meet people. You need to build relationships. You need to make relationships with people because otherwise it won't matter because it's really who you know. And if no one knows you, you're not going to be able to do much. So I got out there and I met with investors. I met with people doing what I wanted to do and I worked for them for free. That's how I gave them my exchange. I did things for them. That's how I learned and picked their mind along the way. So that's how you kind of learn how you learn the business. And as a real estate agent, you're going to go work for a very good broker, and that broker needs to be out there and doing it, and it needs to be successful. And then you'll learn from them, and you're going to end up having to work a lot for them, be able to go above and beyond, do things that other people aren't willing to do for them. And if you do that, they're going to like you and they're going to help you. So anyone who would like to go live, request. All right, all right, I tried to add someone live and it didn't work. It's Miguel Sanchez says, thanks for the recent YouTube video. You're welcome, Miguel. Nico says, I'm looking at Fort Myers and Cape Coral area. How can I target that 2 to 5 year appreciation? Make sure that when you're focusing on a market, you're focusing on a downtown core market. If you're finding in a downtown core market, I believe that those markets are going to go up significantly over time. When people, so one of the things I see happening is that there's going to be like a bifurcation. There's going to be, our days are going to be spent online on the computer away from people. We're not going to talk to people. And then at nights and weekends, we're going to want to go outside and socialize with people. Now, sometimes we still might not want to talk to somebody or talk to other people around us, but we want to be around them. So we want to be able to go to a downtown area, go to a park and see a lot of people out there walking their dog, and we have a lot of areas where we have breweries. We want to go around, get our beers, enjoy ourselves, maybe not socialize, but at least be around people because we're not around people most of the day. If you imagine everybody's at home now, they're getting kind of sick of being at home. They want to go out. They want to see other people. They want to be doing things. So I believe that downtown core areas are going to have a significant appreciation in value. And especially when people are moving down from New York, New Jersey, Chicago, where it's really tight cities, and when they're moving down to, say, Florida, Texas, Georgia, Arizona, and we have a little bit more space in our states, they're going to feel more comfortable being in a downtown core area, and they're going to have a lot of money. So they're going to be willing to spend money to have a comfortable living. So those areas are going to have significant appreciation. The rents are going to go up a lot. Those restaurants and bars are going to be very busy. So I think investing in those areas, and for the last 15 years, I've been doing that. So my property values have tripled, quadrupled, sometimes 5x what I bought them for. And remember, I only put down 20%. So if you're putting down 20% and the property goes up 5 times, your return on investment is sick. It's amazing. So that's how I was able to, I bought my 7 unit for $335. It's worth over $1 million, and I only put down $35,000. So I've made over $700,000 profit on a $35,000 investment. That's why I'm very confident, and I think that's just the beginning. There's a lot more room to grow over the next 15 years in downtown core areas. The baby boomers, a lot of them still have a lot of time to retire. So I think that's how you're going to get your major appreciation over the next 2 to 5 years, and actually over the next 15 years. All right, someone's asking to GWAG wants to go live. Hello. So you're live. How can I help you? What question do you have for us?
I want to get into real estate, and I'm going to buy a duplex, and I'm wondering if I should use my 3% down on that or not.
Yes. I think you should try to get your 3.5% down on a duplex, triplex, or quadplex. So how old are you?
14.
That's smart. I started at 14. So I started studying at 14. I was able to buy my first deal at 19. So it took me 5 years, but all that hustling, all that education was able to get me to buy my first duplex at 19. And I was able to get to 23 units by 23. So put in the work now, and you're going to get a lot of benefits in the future.
Awesome. Thank you.
So any other questions for us?
No. Thank you.
Awesome. Keep up. So that's awesome seeing that. You know, you got to be passionate, because if you really want it, you're going to get it. All right. So Candy Apple on YouTube says, when you say you started making your job salary from real estate at 23, do you mean total rental income was equivalent, or the positive cash flow after you paid your monthly mortgage? So at 23, from all my units, after mortgage, taxes, insurance, utilities, after all the expenses, the money left over, that net income was equivalent to what I made as a salary. So yes, it could replace it. So now I was making the same amount of money from both. And I saved that money, and I constantly upgraded the property to increase the cash flow more and more and more. So, and again, I didn't get flashy. I didn't buy the Datsun. I didn't buy the i8. I waited until I was like 30 before buying that. So I had, from the time I bought, by the time I had 23 units to the time I bought all the cars and the fancy house and all that stuff, it was almost another 10 years. So imagine how it kept on building and growing, because in real estate, it appreciates over time. So the longer you wait, the more it grows bigger and bigger and bigger. And that's where you can build your wealth over time. It's been nice, right? Because that income that I'm bringing in has been growing. And now what I've been doing is I've been getting the properties that I don't love and replacing them with ones that I love. And I'm keeping that, and I'm keeping basically the same number of units. But now my net cash flow, my positive net cash flow on 23 units is over $10,000 a month. So after all expenses, I bring in over $10,000 a month just from that one business. And I have other people that handle the repairs. I have other people that handle different issues. So I'm not really involved very much in it. My involvement is trying to find the next deal. My involvement is physically taking care of myself. My involvement is educating myself to be prepared for the next move. And then, because I know if I make one good move, like I did with the last Safety Harbor project, I said, even if I sit for 6 months and do nothing, if I make one good move, that one good move is going to pay me an extreme amount of, the return is going to be so big. For example, that one move with the Safety Harbor project made me probably like $1.5 million. So I just hung out, sat back, started watching it, and made that huge chunk of money off of it. So, excuse me. Now for you guys, you're not going to go and do a 16 unit right away, but the same concept works on a duplex. Why does it work? Because I did it myself. So if you be patient and watch, you can do it too, right? Now you're not going to make $1.5 million, but you're going to be able to make $120,000. And the next deal, you're going to go and be able to do another 120, and then keep growing till your portfolio gets larger and larger. Now, again, not everyone's going to be able to do it. Not everybody wants to do it. But the reason why I'm teaching you guys this is so you know what to look for. So if you ever decide to partner with somebody, you know what to look for. So you can tell if they're telling the truth. Because there is a lot of people out there, they'll give you a lot of fluff, right? They'll psych you all up, and it's just a whole bunch of BS, and you end up losing money, right? These people now, they sent money to this guy. They sent him each partner sent him $200,000 to this guy to invest in a project, and the guy just ghosted them. Now the property's still there, but there's nobody that they can contact to make distributions. So the money's just stuck in limbo. So you got to be careful because I wanted you guys to know what you're doing. So if you ever do partner or if you ever do it yourself, you're making smart decisions because your partner is like a person you're marrying. So if you don't want to be stuck with them for a very long time, then you shouldn't partner with them. And if you want to buy a property and you don't like the area and you don't want to be stuck there, then don't buy the property, right? So be focused, be patient. You will get good things, but you have to be patient with it. All right. So Santiago says, how do you get the money for the first house? Is a loan to the bank the best option? Yes. Cash, as I said last time, right? Cash, right? This says Federal Reserve note. It's an IOU, right? This note is legal tender for all debts, public and private. Cash is not real, right? This is not actual money, right? Gold is money. This is not money. This is an IOU by the government, okay? They say, hey, we promise that we're going to keep the American government positive and our currency is of value. So this really has an invisible interest rate. It's about 3%, right? The inflation rate. So why would you take cash to pay down loans, right? You shouldn't do that. You shouldn't pay down a loan with another loan, especially with how low interest rates are now. You should save your cash and buy assets because as the dollar goes down in value, your assets are going to go up in value. So that is what I do. And what you're going to do is you're going to save up 3.5% for your first deal, and you could put down 3.5% down on a duplex or a quadplex. Now, that doesn't mean just because you have this loan that's easy to get, you overpay for the property. You still want to make sure that you're buying a good deal and that you're not going to overpay to make sure that you're going to have profit because you want to make, if you overpay, you're not going to be able to, the appreciation won't be significant. But if you make sure you get a discounted price, you buy it at a discounted price, then the appreciation will be significant. Great question, Santiago. What about the second property? So to get the second property isn't that hard, but you have to make sure that you have your taxes, your credit, and your cash all in the right position. So it's 3 things. And if you do that, you will be able to, on the property you're occupying, the multi-unit you're occupying, you'll be able to get a line of credit to pull the cash back out. And then you can use that cash from the line of credit plus whatever you have in savings together to buy another deal. Now you have to make sure what's extremely important is that the property's cash flow. So if you lose if you lose like almost 50% of your tenants between your job and the rent coming in that's remaining, you'll be able to cover the bills comfortably. That is very important. And then you won't be stressed during this time, right? Right now, some of my tenants aren't paying because of the coronavirus. I'm not that stressed because I'm not stuck up to here with this debt, and I didn't overpay for my properties where I'm like really freaking out because how am I going to pay my bills? No, I have enough leeway between how much all my debts and expenses are from that to what my net income is. So roughly, whatever your net income is, you should try to be very close to 50% expenses. Your net income from the fourplex is 4,000. You should try to have all your expenses around 2,000, and then you're going to be comfortable. All right. Someone asking to go live. Than wants to go live. Than, how are you?
I'm doing good. Great. How are you?
Doing good, thanks.
So, I'm trying to do my first deal right now and getting people like to actually sell the property, but they're not actually wanting to sell it. Because I know that you follow up with a lot of properties in your area that people initially didn't want to sell it. So, for me, what do I do when people don't want to sell it? How do I follow up with them?
So one of the things I do is I'm mailing them every 3 months because initially they didn't want to sell, but 3 years later they decided to sell. This is a numbers game. You have to put out a volume of requests for you to finally find someone interested. So normally they say you have to send out 200 letters to different people and hit them 3 to 6 times for you to have one yes.
So how often do you do that? 3 months or 2 months or how?
So me, I don't. I'm gonna say probably every like 3 to 6 months. 3 to 6 months.
Do like, so there's a big gap in with that.
Because again, I didn't start taking on investors until a month ago. So before that, all the money that I did, the money that I got, that I purchased the 23 units, that was all my money. So you got to think, I was only working from $8 to $12 an hour. I didn't have a lot of money. So I had to stretch every dollar, and that took a while. And then sometimes I didn't even have to do the mailer because I would find a piece of real estate go up for sale on the MLS. And because I'm constantly watching, the day it went up, I signed the contract to buy it. Because sometimes you will find amazing deals on the MLS. Currently, from the wholesalers, I have not found any deal from a wholesaler that was worth doing in the last year. It's just, they're not profitable. Like by the time you buy it from them, do the remodel and sell it, and then you broke even. And then if you have carrying costs, sometimes you lost money. So it's not worth it. That's why I've kind of been sitting back. Like if you watch like Manny Kashabin, you don't hear him talk about many deals in the last year. He's probably only talked about one deal that he's looked at. And he's worth what? He has $250 million in real estate. So it's just not that the current market is not that profitable, isn't very profitable. So I'm being patient because I definitely think there's going to be a significant amount of profitable deals coming to the market in the next 12 months.
So also some other things that I'm trying to get, and if price is too high, how do I negotiate to get down on the price?
Well, you can explain to them why their price is too high. You can show them the numbers, right? Look, based off of your rent, after mortgage, taxes, and insurance, based off of your price, there isn't any profit here. There isn't any money left over. Now, I'm not telling you that they're going to actually listen. Some people now, they've been stuck with the last 5 years of very high prices. In their mind, they think that they deserve a very high price, right? And Randy Corker said comps, right? Even if you show comps, a lot of the comps are too high. I think the market is at least 20% overvalued in the real estate market. We have below average interest rates that if interest goes back to the normal percentage, people will not be able to continue purchasing properties at that price. The price is going to have to drop 10 to 20% alone just because of interest rates going back to the 4s, the 5s, right? So if you pull comps, unfortunately, the comps are going to basically say, everyone's going to be like, oh, look, see, I deserve this much money, which I don't think they deserve that much money. And again, I'm not upset with the sellers because as a seller, I want the most money possible. As a buyer, I want the best deal possible. So by you trying to find the middle point where everybody wins is a good thing. But I think now is not the best time. Unless you get a great deal, I don't think now is the best time. I think being patient and waiting is smart because great deals are going to come.
Do you call them every week or every something, or just send letters?
No, I just send letters. Once in a while I'll call, but rarely, because you don't want to annoy them. If you annoy them, they're not going to want to deal with you. You know, they're going to go to someone else. So you don't want to overdo it, but you want to be what's called top of mind. So when they think of selling, they'll be like, you know what? I'm going to call that fan guy because he keeps on sending me the letter. So like for one of the letters I sent to this guy has an 18 unit property. And I kept sending him a letter every month. And then I started sending him a letter every 3 months. And he said, hey, Pascal, I got your letter. I will call you when I'm ready. So I said, okay. So what I do, I switched it every 6 months because I still want to send him the letter because I still want him to remember me. But I don't want to send it every month or 3 months where I'm disrespectful. Because a lot of people, especially real estate people that own a lot of real estate, they're big on the old school respect, and they won't deal with someone they don't like. They'll take a lower price from someone they like than a higher price from someone they don't like because they just spite them and not want to give it to them.
Do you ever get good deals from investors, or it's pretty hard to get?
In the last 3 years, no. No, there's not. Normally, I found from wholesalers, they add such a huge margin that there's no profit. I mean, you could get lucky. You can get lucky in your market to find something that's worth it. But in the Tampa market, I have not found any because I'm willing to buy. I'm ready to buy something. I'm getting tired. I want to buy something, but I haven't found anything profitable. And this is not a hobby. Like, I enjoy what I do, but I want to do it and make money. So
Also, where do you usually get your deals from, or where do you usually get your leads from?
I get deals everywhere, like everywhere, from mailing, from the MLS, from driving by and seeing a sign and calling it, from meeting people and just say, hey, I'm interested in someone calling me. So everywhere, like, there's not one place that I get deals. And right now, just so you know, everyone is having a hard time finding deals. Like, everybody's having a hard time finding deals. So it's not as easy as it used to be.
All right, thanks, man.
Welcome, fan. All right. All right. Kingdom Property Solutions wants to go live. Next door Sand says, can you give some advice on buying a fourplex and living in one of them, please? The last 4 posts I put up is about buying a fourplex, living on one side, and renting out the other 3. So, how you doing?
How's it going, Pascal?
It's going good. How are you?
Thank you for having me. I'm new to your content, so I'm sorry if my questions are a little bit redundant.
No problem. Go ahead.
First thing you mentioned is when you first started in
So it's hard to hear you right now. Your volume's not coming through. All right. Can you hear me? Hello? Hello? Okay, for some reason that didn't work out. So let's put on Rizzo wants to ask a question. Hello, how are you?
Hey Pascal, how are you?
I'm doing good. You're live.
So I keep it. Yeah, I've been following you for a short term. I'll keep it quick. I live in San Diego, California,
Mm-hmm.
and I always loved the real estate, right?
Mm-hmm.
I have my real estate license, but I don't use it to sell homes. I was using it for selling timeshares out here, and as you know, ever since February, all that went to shit.
Yeah.
So I bought my first property with my wife back in 2011. It was when everything crashed back then in San Diego, and I got a great deal on it.
Yes.
So I have a couple $100,000 in equity.
Nice.
So here's my question: with all these things, I've been waiting for something to happen. I know following the economy that every 10 to 12 years there's a dip, right?
Cyclical, the debt cycle, yeah.
Exactly. So I didn't know what it was going to be. I didn't know it was going to be this big worldwide, whatever.
Mhm.
So it's here. What we want to do, I was talking to my wife, and we want to take out maybe, 100,000 out of the house, still leave about 30% equity in it, rent this property, and literally wait, because I feel exactly what you're feeling. I think the market right now is overvalued.
Mhm.
I think it hasn't really hit the housing market, right? It just happened. You see the financials, but it's going to take a couple of months for people to realize, the $600 extra a week isn't going to pay my bills
For sure.
that they're getting on unemployment. So, do you think it's safe for me to pull that money and sit on it for the next 12 months to buy something else?
So let me say this. Do I think it's smart for a financially frugal person to pull out all of their equity and sit on their cash?
I'm not
Yes.
pulling out all of it. I'm still leaving 30% in the house.
I would tell somebody that is financially in a good position to pull it all out. Everything they could. 100% if they can.
I can. I mean, I can take
I'm not-
90%.
Again, I'm not telling you because again, I can't tell you what to do because I haven't reviewed your taxes. I haven't reviewed how much money I don't know. There's a lot of factors I don't know, right? But what am I doing? Everything. I pulled out all the equity in my house. I am 100% pulled out of all the equity in my house because the interest rate's at like 3%, 4%. The payment is like nothing. And I'm sitting on a bunch of money that I will be able to buy a property that, for example, let's just think of it this way, guys. If a $500,000 property falls to $400,000, okay, and I'm putting down 20% on that $400,000 property, that's $80,000. When that property goes back to 500, I made 100,000 on the $80,000 investment, ignoring the rent I made. And let's understand that we just tripled the amount of money we have in our system, right? Like some ridiculous number, right? So it's going to cause a significant amount of inflation. So what's going to happen though is that $500,000 property is going to become a $600,000 property. So my $80,000 just made 200 grand. So if someone can afford to sit on that money and they have the stomach for it, they're going to benefit. Wall Street lags Main Street. So there's going to be a lag before that happens. So you're going to have to be sitting on the money for about a year before you find a deal.
Okay. Because I can, I'm already financed. I'm about to get, the 100,000. But when I was talking to my guy, he said you could actually get a line of credit.
Yeah.
Because I wanted more. The reason why I didn't take more is because it's going to hit my loan value. It's going to hit my interest rate. But once it hits different
So
value, they'll raise your price.
correct. So what you would do is you would either get to 75 or 80% loan to value on your first mortgage, then you would get a second mortgage, your line of credit for the rest of that difference. I'll repeat that.
Correct. So
And the first mortgage is 80%, 75 to 80% LTV, and then you get a line of credit for the difference. And that line of credit is normally interest only. And make sure you get a line of credit that is interest only, does not require you to make an interest in principal payment, because that will screw up your loan to value. There's some companies that'll make you pay interest and principal on your line of credit. There's some that won't. So you want to make sure that you're only interest only to keep your LTV good. And once you rent that property out, then that'll help. It'll adjust your loan to value. It'll adjust your debt to coverage ratio.
Right.
So normally you're going to show, hey, look, I got a lease. I'm going to have someone rent this place out. I'm going to go and move into another spot.
That's the plan. Unfortunately, I would love to get into a duplex or a triplex in San Diego, but I don't really have 1.5, 1.6 million to, or even carry a loan like that.
Well, remember,
So
if you do 1.5, hopefully you'll be able to try to figure out to put down 20%. I know 300 grand is a lot of money to put down, but if you start scraping them from different sources, it's possible you might be able to do that. At the same time, the rental income from the other units will add towards your debt coverage ratio. So you don't have to yourself cover it. The tenants can also help cover it.
That's true. The only thing that scares me is putting all of your basket plus borrowing in one basket.
And that is what it comes down to, your gut. Because again, you have to have a very strong gut, because part of the game is to be able to hold on when everybody else lets go. And you have to ride it out, because it is going to be a storm, right? It's very easy to talk about this stuff, guys. But when the storm comes and everybody's freaking out and they're like, the world's going to end, and people start buying a shitload of bullets because they think the world's going to end, and they're buying gold, and like everybody's going crazy, it is hard to stick to it. So that's what I'm saying. You have to be able to, I can't tell you exactly what to do. I can give you an idea. And this idea, you can work with it how you want to work with it, right? Again, not everyone's going to be a real estate investor. But if you understand the idea, other people that are watching might team up with somebody, right? It's depends. Like it's really what works for you. Normally, though, what I've been teaching everybody is that it's the profitability of a multi-unit is significantly better cash flow wise than a single family home, townhouse, or condo. So,
what do you think about if I go out of state? Maybe Arizona is the closest thing to me. Nevada is the closest thing to me. It's a 5-hour drive. Do you recommend that as well? Should I start, studying the areas and studying, see how much they're going for, and how can I know how much are good areas and what the rent or return is on those areas?
And that's where your study comes in. That's where you put in the work and you study your market, right? You're going to go and you're going to study your market and then figure out what area you want to be in. And then go drive the area, take a flight, drive and check it out and see what works for you, right? So we're all going to try and see what works for us and what we're comfortable with. Who knows? You might work on making a partnership with somebody. You found somebody on some forum, you meet them and you're like, you know what? This person seems legit and I'm going to partner with them. They're going to be local. I'm going to be out of state, and we can create some type of partnership. So it's really dependent on you, what your comfort is. So
I don't mean to take too much of your time, but I'm looking at homes here. Average, it starts from 500,000 on the SFR in where I'm at, right?
Mm-hmm.
And that same 500,000, 600,000, if I go to someplace in like Nevada or even someplace in Arizona, I could get a 10 unit or maybe a 15 unit. Again, I don't know if the appreciation, like you said, is going to be as great as California, which I know it's not.
I think you're going to do fine, though, because your appreciation should be pretty good, because those states, the Sun Belt or the Rust Belt, they're going to do good over time, because a lot of people are going to retire and move there. So it is.
Shouldn't be afraid of getting into a 10 unit, even though I've never even had a duplex.
Now, you might not be allowed to do that because you need to have a resume. Like, that's where you might need to partner with someone that has history. Like, I can buy large projects, but you can't just day one jump to a 10 unit with no resume. They won't even, it doesn't matter how much money you have.
Okay, good to know.
Yeah, it doesn't matter. Like, for example, it might be easier for you to get $1 million loan on a fourplex than it is for you to get $1 million loan on a 10 unit, because they're going to say you don't have the resume for it.
I got you.
So like a lot of times when you're going into these big deals, someone will call on someone like myself to be the syndicator, or to be the I forget the word. I'm forgetting the word right now. But basically the person that signs off, that says, I'm going to watch this deal. I have the resume, like a co-signer in a way, to say, I'm going to watch this deal to make sure that it goes good, because I know what I'm doing. I've been doing this for a while. And then the bank will be like, okay. Because normally when you get to the big deals, they're all federal government loans. once you're going through these bigger deals, it's over $1 million loan. Almost all of the loans are done by Fannie Mae and Freddie Mac. Now, what's awesome, they're 30-year loans, they're 3.5% interest rates, there's 20% down. So you're buying a $2 million deal with $400,000. It's great. Yep. So,
Is there a book out there that you recommend reading to help, your average Joe starting in this?
well, have you read Rich Dad Poor Dad?
Yeah, I love it.
So
I
Rich,
follow him. It's crazy. Have you seen his new stuff? He says everyone's screwed.
no, he said, he's like, they asked him, they're like, Robert Kiyosaki, they asked him, they're like, what would you do how can you fix the American economy? He's like, you can't fix it. He's like, you can't fix it. And he's like, unless you got a team. And I agree with him on that. It's like, if you got a team, you and your team all work well, you're going to win, right? And the rest are going to suffer. And they say now, another thing they say, small is the new big. You got a nice tight team of like 100 people or 50 people, you're going to be able to survive a lot better than the 1,000, 2,000, 3,000 people companies out there.
Yeah, he's a big buy gold, never sell it, just buy gold because paper has no value.
And just sit on it, yeah, yeah, and it has no value.
Gold. There's no gold to be found. Like,
that's what I said. I said that the money, and I said the money right now, the on Wall Street, it is not matching what's happening on Main Street. Gold value is not really what it is.
You don't want gold stocks, you want the actual bar.
Yeah, but even the gold stock doesn't make sense. Actual silver should be $50 an ounce forever. It's only at 14, 17. It's retarded. It's not. They're manipulating the system. So the stock prices are not real, right? None of this stuff is real.
You're scaring me right now because I recently invested in stock and they're going up right now. Like I'm in oil, I'm in airlines.
I mean, I'm not. The thing is, again, I came out first in my class in investing and in trading, right? So I could be in it. I just don't want to play that game, right?
I got you. Thank you so much for your info. I'm sure I'll hit you up again if I have any questions.
Cool. All right, guys. Yeah, Richard does give stock advice. It's not my game. I'd rather stay focused on real estate because the bigger returns are in real estate, and I don't want to deviate from my focus. All right. Gavin, I'm good. How are you, buddy?
All right, hopefully we get a better connection now. Can you hear me?
Yes, sir.
Awesome. I'm not sure what happened earlier. So I have 3 questions. First of all, thank you for having me. I'm new to your content, and you might have answered these already. You mentioned that when you first started out, you were doing free things for people like heavy hitters in the real estate world. I'm guessing to get mentors. What are some of these things that you would recommend a newbie to do to get close to someone that does very well, so that they can be like a fly on the wall?
So not all of them were heavy hitters. Some of these guys only owned, say like 4 units or 8 units. They weren't like, worth hundreds of millions of dollars. The ones that are worth hundreds of millions of dollars, normally I would sit down and talk with them for like 5 minutes. Like literally you can get 5 minutes in between something. So one of the ones that was worth a lot of money is I ended up doing a lot of accounting work for him at a significantly reduced price. I was working for like $10 an hour, but He owned 16 convenience stores. So I did all the books for all 16 convenience stores for the last 12 months. And I only charged him $10 an hour. And in between asking him questions about making sure I did them properly, I was being able to analyze his data and asking him why did he do things a certain way. And I was able to see what he was doing and being able to basically take apart his machine and put it back together. For other guys, I did physical labor. So like they needed help with remodeling a unit. So as I was remodeling the unit with them, or like helping, move boxes of tile or this or that, I was able to ask them, well, why did you do this? Why did you do that? Why did you put in this material? Like what happened? And a lot of times they're more than happy to talk and help you. The thing is they just don't have time. So they'll help you as long as you're willing to work with them and help them, and they'll give you advice along the way.
Awesome, thanks. My next question is, as far as wholesaling, do you have a background in wholesaling? Is that something that you kind of dabbled in? And what's your honest thought about wholesalers and that strategy as a whole?
You can make money wholesaling. Are they telling you the truth about wholesaling? Yes. But just like wholesaling, being a real estate agent, being a mortgage broker, any of those things will make a lot of money. They will all make a lot of money. They work if you work. That's it. They work if you work. Wholesalers will make hundreds of calls, put up hundreds of signs to find somebody that wants to sell, puts it under contract, and then blasts email out to other people interested in buying, and then makes the purchase within a 30-day period. If you look at their margin that they're making, 10%, it's going to be something similar to what a real estate agent is going to make on their commission, especially if they remember, they're finding the seller and they're finding the buyer. If you're a real estate agent, you'd make 4 to 6% on that. So if you did that on a $200,000 deal, you'd make sometimes more than what a wholesaler would make. So again, you don't need a real estate license. Well, it's not that freaking hard to get a real estate license. There's tens of thousands of people with real estate licenses in Florida, and most of them don't work, meaning they're not closing any deals. There's a reason. It only works if you do the work, if you put in the work, and it requires a lot of work. So you can't be afraid of the phone, right? I'm opening up a mortgage company, and I'm talking to guys that want to work for me. And I said, look, you can make a lot of money if you work. But if you don't work and you're not hammering the phone, if you're not reaching out in your community, if you're not doing that, you're not going to sell anything. You're not going to close any loans. You're not going to do any refinances. So will it work? Yes, if you work.
Gotcha. Awesome. And my last question is, you speak about studying your markets. What tools do you use, let's say, aside from the MLS, to study the market, or what's your strategy for that?
Really, I just find areas that I want to buy in, and I see what was sold, what the condition was, and then after they remodeled it, how much was it sold for? At the same time, what is it being rented for? And then I can do an analysis. I can create a pro forma and then calculate the returns.
And that data, you'll just pull it from something like Zillow or Trulia or anything fancy?
No, nothing fancy, right? It's just basic data. And then I'll go to Property Appraiser to see what something, say I couldn't find it. I'll go to Property Appraiser. It'll show what it was sold for. I'll see the trend. And what you'll start doing is you'll start absorbing enough data that you're going to start seeing trends. And then you'll be able to determine, is it worth it? This is the same thing you're going to do as a wholesaler. You're going to go in, you're going to check real quick on Zillow or Realtor. Are those numbers very accurate? They're not very accurate, but they're close enough to give you a general idea, So as you do enough of those deals, you're going to start getting an idea. When you start meeting up with local people in your market that are doing remodels, you can start getting an idea. And you can ask certain things like, what's a common thing that pops up that you don't expect, that you can't see, or that's like expensive? They might say, well, AC units, roof, blah, 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 whatever it is. It's going to be something. You're like, oh, don't buy anything after 1970 because of the plumbing. Well, why? Well, because it has this type of plumbing and you have to redo the plumbing. It's very expensive. So then when you're doing an inspection, you can double check those things. And sometimes I'll buy those type of properties that are very old, and I know that there could be a plumbing issue there, but I make sure that I price my deal accordingly to the cost of doing those repairs.
Good stuff, man. Appreciate it.
You're very welcome. This is a long game. Real estate game is a long game. Now, again, you can make fast money doing other things, which is fine. But remember, if it comes fast, it goes fast. And if you're going to make that money, it's smart for you to reinvest it in real estate so you can consistently bring in money. If you don't have that habit, or if you don't have the gut, then you need to just stay focused on your day job and then invest your income into the real estate. And I did it that way, the conservative way, and it worked out. So I'm just trying to show you guys the same.
Awesome. Thanks, my man.
See you next time. All right, guys. Time should be running out soon, so I'll be able to take on a couple more questions before the IG feed ends. And then we'll just be on YouTube after that. I'm still on YouTube Live, so when the IG feed ends, you can hop onto YouTube. We'll stay on for probably another 15 minutes.
Hey, Pascal, what's up, man?
What's up, Luis? How are you?
Doing good, man. Following you for a long time. Love your content. Just a quick question for you. So with the market in all its uncertainty, what's your recommendation? Waiting to see how it plays out in the next couple of months, or you think it's a good time to buy now?
I would be patient.
Patient?
Unless you're going to get an amazing deal, it's not worth it.
Okay.
Because minimum 10% drop.
Okay. So I'm looking at, in my area, the property that I'm looking at, it's a 2-unit. It's fully rented out. It's $50,000. It's not the best area, but it has cash flow. What do you think?
What type of loan are you going to get what type of loan are you using to get that property?
It'll be a conventional.
Okay. And 20% down or 3.5% down?
I think I'll do 20%.
Okay. So in those neighborhoods that the properties are 50,000, they fall hard. Okay. The example I had up on my most recent video, I bought a triplex in the hood for like $80,000. The previous person bought it for I think over $180,000, probably over like 210, I think. So I thought I got an amazing deal, right? 3 years later, the triplex next door sold for like $28,000. Now, was I getting amazing cash flow? Yes. Did I sell it later for a lot of money and made profit? Yes. But if you can be patient, and if this $50,000 deal is an average deal, like it's not that hard to find a duplex for $50,000, then you're not really incentivized to buy now, because whatever cash flow you're going to make, I'm going to make some assumptions here, but I'm going to assume that the cash flow you're going to make from it isn't a ridiculous amount of money, right? It's not going to matter, where if you just wait, you might be able to pick up in your market a fourplex for $50,000.
Sure. Okay.
So in that sense,
there are similar properties that are ranging around, 70,000, 100,000. And you mentioned a 10% drop, but 10 grand here, is that, is it going to be worthwhile waiting, or should I just, kind of shoot my shot now while I'm, ready for it?
What I'm saying is a minimum 10% drop, and normally in the lower income areas, in rural areas, they drop even harder. So that was another thing I was mentioning, is that in one neighborhood, it might be a 10% drop. In another area, in a low income area or a rural area, it's going to drop even harder. So
Okay.
it could be a 20% drop, it could be a 30% drop, but I say at least 10. Now, again, if you're making that type of money, if you can get it for 50 and it's worth 75 or 100, then, if you can move fast enough, you can buy it and then sell it to someone else. Buy it,
Okay,
remodel it, and sell it to someone else. I mean,
Okay.
you have many opportunities. And if you have a significant amount of cash saved to the side where this is not going to be one deal, you're going to buy 10 of these deals, then you could be like, okay, I can buy some now and then keep buying every 3 to 6 months along the way, where I can dollar cost average into my real estate and then dollar cost average out of the real estate deals, right? So it depends on your situation. But if this is, say this $10,000 is a good chunk of your money, it's your return on investment. If you get a fourplex for the same amount of money, is going to be significant for your 1 year wait.
Okay. And then I guess once you purchase the property, what's your first step? Remodel and then reappraise, or how does that work?
Yes. So I do a value add, right? And it depends on what you need to do. So it could be as small as painting and like some, shrubs and whatnot. And it could be as significant as full remodel, A to Z, new roof, new AC, new everything. So it really depends on what condition you're getting in. Now, I particularly like buying someone that's destroyed and putting everything brand new. So I know nothing needs to be done for the next 10 years. But if it's in decent condition, then you can just paint, increase rents. And then remember, it's very important that you whatever you do has to increase the rent. Because if it doesn't increase the rent, you're not going to be able to normally increase the value of the property. And even if you do increase the value of the property, if the rent isn't high enough, you can't justify the cash flow.
Sure.
So you need to increase the value of the property and increase the rent to justify your new higher loan amount.
Okay. All right. Cool.
All right.
Appreciate that, man.
Cool, man. See you next
All
time.
right, brother. Okay.
Peace. All right. All right. Spencer's been waiting patiently.
Hey, what's going on, brother?
What's going on, Spencer? How are you, man?
Pretty good. I added you recently. I found out about you just randomly, and I'm very interested in what you've been saying tonight. It's the first time I've tuned into you. So let me give you the drop real quick. 42, 20-year plus military, coming out of divorce. Got one toy I'm paying for right now, and then looking to get into real estate sometime in the next 12 months to 15 months. I've been shopping around a little bit in different areas, like from Charlotte all the way to Austin, because those are the places where I'm currently working with the DOD that I might be able to go. So I'm curious. I'm kind of, my mom's traditional, and she tells me all this stuff about, buying a home, small homes. And then I found out about duplexes and quadplexes because I'm not very versed on real estate yet.
Mhm.
I'm still learning. Recommendation, 2-unit or 4-unit to start off with. I have about $3,000 I could play with after taxes a month to purchase or save up towards a purchase. So I'm just curious, what are your thoughts?
So one, if you haven't used your VA loan, you can get a fourplex with basically no money down. And I think the VA loan now has no cap, right? So the one concept I want you to understand, this is going to be in my course, that's the psychology of a real estate investor, is that we understand that cash means nothing. Cash is worthless. Okay, it is just it's for liquidity. It doesn't mean anything. So if you have a bunch of cash, it doesn't help you, and paying off your loan isn't going to help you. That's a very old school thinking. Your mom would have been accurate back before 1980.
Oh, I know she's outdated. So
right.
That's what I meant.
Since the dollar is off of the gold standard, and guys, if the live event drops because it's only for 1 hour, I'm still on YouTube Live, so you can hop on there. Because the dollar is off of the gold standard, the dollar is basically only off of the pledge of the government. It's not worth anything. So you're going to be, now we have an invisible an interest rate of 3%. So what is our home interest rate? Around 3%. So it's not worth having dollars to pay off that loan because you're having one loan to pay off another loan. Doesn't make any sense. Your big money is in appreciation. All assets, gold, silver, real estate, is going to appreciate, and we know it's going to appreciate by minimum because of the fact of the inflation rate, because of the printing of money. So it's going to continue growing. So as long as you have a loan, the loan's going to be worth less every year because the dollars you're paying it back with are worth less. And now it's easier to get more money. And then two, the assets are going to keep on appreciating. So you're going to make that margin. So the bigger the deal you buy, the bigger the asset you buy. And as long as you make enough money to cash flow it positive, you're going to create more wealth every single year. Every single year, it's going to go more and more and more. So you're going to build that difference. So in 10 years, when you sell that property, at minimum, you should be able to sell it for almost 30% more than what you bought it for. So you buy a $400,000 property. In 10 years, you should be able to sell it for $520,000. Now, I'm ignoring the fact that you paid down the loan over time. I'm ignoring the fact that you made rent over time. And the fact that you have $3,000 extra a month is great, because if you buy something that needs work, you can afford to fix it up since you have extra money. And you're investing in the property and making it better over time as well. So that should be able to make it even more than the $120,000 profit. So if you buy right and do good value adds, you'll make more than $120,000. So I bought a fourplex for $180,000. I put down $40,000. I did value add to it. I increased the rents. I made sure to buy in a great area where I knew the market was going to continue to grow. That fourplex, now it's about 5 to 7 years later, it's worth like $550,000. I just did a refinance about a year ago and pulled out about $180,000 in cash. So now I have no money in this deal. I actually took out more money than I initially put in. I walked with about $140,000 positive on that loan. And I used that money to not buy toys, but to buy another piece of real estate, because I'm constantly just playing that game and going up and up and up. And as long as I make sure that the amount of rent I'm bringing in is significantly more than my mortgage, taxes, insurance, and the maintenance on the property, you're going to continually build your wealth.
Yeah, I appreciate that. The other question I had, if you don't mind, is how do you calculate the increases once you do purchase property to the rent? I mean, is there a set formula? Like, is it 10% of what you're investing into it, or?
So I calculate, I need to have at least a 25% return annually for my investment for me to say, okay, let me do this. So for example, if I'm going to say paint the outside, sometimes you have to paint it. If it's so bad, you have to do it, right? It's like it's a must. But let's just say you have carpets, okay? And you could replace it for more carpet, right? You're going to replace old carpet, put in new carpet, and it's cheap to replace carpet. And you can think to yourself, for an extra $1,000 or $2,000 for this unit, I'm going to put in tile or vinyl floors. If I put in tile or vinyl floors, would my rent increase? And okay, yes, it increases. How much does it increase? Well, it's going to cost me $2,000, but my rent increases $100 a month. Okay, so I made $1,200 for the $2,000 difference. Not for the total cost of the flooring, but the difference between carpet and tile. Does that make sense? Because carpet would have cost $1,000, but now I'm putting in tile, it costs $3,000. Well, what's the difference? $2,000. Well, that $2,000 extra? Is it going to add value to the rent? Yes, $1,200. So wow, that's a 60% return. So this is a go. On top of that, you don't ever have to really change the tile, because that tile is going to be good for like 15 years, where you have to change your carpet every 5 to 7 years. So then you're like, okay, now not only did I save money on additional rent, I also don't have to do it as often. So my net income increases and my value of the real estate went up, because rent went up and the appraised value of the property went up. So I have multiple wins on that decision, right? So you're going to start figuring that out as time goes on. You're going to start figuring that out by meeting up with other investors, taking different courses. You're going to educate yourself, and you're going to learn these things where you're like, wow, yeah, it's worth it to spend money, because if I go cheap, you never want to go cheap on quality of material. That is going to be your worst decision, because if you buy bad quality material, it's going to get beat up. So just kind of keep that in mind.
That's really cool. Because I have been looking into this for a while. When I was married, I had to get the approval of my spouse. It was always a no-go. I said, look, this was 10 years ago, brother. And, now I'm 42. It's like I could have been doing this a lot sooner. So, no, I really appreciate you sharing your knowledge and your experience with me on that. I really do.
You're very welcome.
Thank you.
So be prepared. In like 12 months, there's going to be a lot of opportunity for you. So you can make up for those 10 years in that this one buying opportunity, because you get one good buying opportunity every like 10 years, and it's coming.
Okay.
Cool.
I look forward to it. And I have been looking at places that are growing, like you said, like Charlotte, Austin. I really like those areas. They seem to be booming. They haven't been touched too bad by the economy. And they just have an overall good, seems like a good vibe for the whole area.
Yeah,
So,
for
all right.
sure.
Thank you.
You're welcome. See you guys later. All right, guys.
All right, brother.
All right. So love the great questions. All right. Let's see anybody else. King Priv has a question. I can't believe it's been letting it go for past an hour. Normally it ends after an hour. Hey, buddy, you're live. What question do you have for us?
So I think I texted you before, but I don't think you responded.
Okay.
So I was wondering, if I buy a fourplex, can I do it with the FHA 4X, the one that you can like use invest money and they help to give you money to rebuild to it?
So you're talking about the FHA 203K loan. Yes, you can. Now, this is the one thing you got to remember. On the FHA 203K loan, I think the max remodel budget they give you is like $60,000 or $70,000. So you can't have a heavy remodel. It can't be an extremely distressed property, right? So you have to have like a somewhat light remodel. Also, they give you like a list of people you can use, contractors. You have to use a GC. So the amount of obviously it costs more to use a GC. So make sure that you're focusing on when you buy the property and you're estimating the remodel, you're not estimating the remodel at so Jazz just said 30,000 is a max. So it might be 30,000. When you're estimating the remodel, don't think of the way you would do it yourself, or if a handyman was going to do it. You're going to have to think about it's going to be GC pricing, which is sometimes double or triple what a handyman would charge. So, if it is just 30K, it's not going to go that far. So do research on your area of how much they're willing to give.
I live in Miami, Florida.
You live where? Miami?
Yeah, age of 18. I'm 18 years old. Yeah.
Cool. That's good. I mean, so definitely look into it, and you're not going to be able to do like a heavy remodel with it. So be conscious. And then too, if you're trying to get at 18, 19, your fourplex needs a cash flow. So you need to buy it at a good price, and it needs to currently have tenants in it. So it can't be so bad that that people aren't living there, right? Because it'll be hard for you to get the loan.
So like the tenants are supposed to be in it while you buy it.
Can you say that again?
The tenants are supposed to be in it when you buy it, like buy the property.
Yes, they have to be living in it, because remember, so when I bought my duplex, I needed another tenant in there to help qualify for the loan, because my money alone wasn't enough. I also needed the tenants the rental income, and what they do is when you buy a fourplex or a duplex, they take the rent that's currently the property's making and they add it to your income. So if you're like, oh, I can only afford a $200,000 loan as a single family home or a condo, well, if you buy a duplex, they're going to add that rent that's being paid on the property, and they're going to add it to your income. So then you can afford a $300,000 loan. Like, this is an example.
So in order to find out, like, I have to go to realtor.com or MLS to find them.
You would have to go to a mortgage broker, and the mortgage broker is going to be able to pre-approve you and get you a pre-approval letter, and then he can run through examples. And you're going to be like, hey, if I looked at some examples and I looked at this duplex and it was selling for 400,000, and the current rent for that duplex is 1,500 each side. Well, I'm going to move into one side, and I'm going to continue renting out the other side. So, at that amount, could I qualify? Could I qualify for a $400,000 loan? And he'll tell you. He'll be like, okay, based off of your income, you can qualify for X dollar. And if you bring in this much rent, it can increase the amount.
So in order for the 18 years old, just like me, I should speak to a mortgage person to tell me the information about what to do.
Because again, it's individualized, because your mortgage and what you're pre-approved for is based off of how much money you make, plus your tax return, plus your credit history, plus your down payment. So it's not like a simple, it's not that simple, and it's not hard. It's not hard either, but you have to know those four things, right? Down payment, tax return, current income, credit history. And that will change your interest rate, and that'll change your monthly payment.
You know, for me, like, you know, the credit score like 600 credit score.
I think the minimum is like 620. So that's why I wasn't able to buy my first property at 18, is because I needed 2 years of tax returns, and I wasn't able to have my second year of tax return until I was 19. Or at least you at least need 1 year of tax return. So you have to show some income. So if you want to build your credit, get 2 or 3 credit cards, buy something small on them, pay it off every month for 6 to 12 months, and you're going to get credit. You're going to have credit. You're going to be in the 650, 680 range by just doing that.
Well, thank you.
Yeah, you're welcome.
So I just need my credit score up, and I just speak to a person to tell me.
Yeah, and then just make sure you get a stable job as well, right? Because that's going to matter, because you need stable income to qualify for a loan. They want to make sure that you're able to pay the mortgage. All right. Good talking to you.
Thank you.
All right, guys. All these great questions. American Russian says, if I'm being honest with you, I don't understand this. I do know that I meet you on Xbox and you ask me what color. I've never been on Xbox, so I don't know if you're talking to me. Probably not. All right. So, yes. You can show the tenant you have tenants in place, you're about to put tenants in place, or that are already in place at the property you're looking to buy. Street Culture says, you rock, brother. Thanks. So, should I sell my so Jazz says, should I sell my 2-family before it drops? The question is, do you love that property and do you love the location it's in? If the answer is yes, then keep it. But if you don't love that property and you don't love the location it's in, then you can consider selling it now, getting your money, and then holding off to buy a bigger deal. And if you sell it now and you've lived in the property yourself, and if you've lived in it at least 2 years for the past 5 years, you can make up to $250,000 profit, and not owe any tax on it. So Danny says, is it better to build a duplex or buy one? Normally, in Florida at least, I found it is better for you to buy one and upgrade it. It is more cost effective. Is a forbearance terrible? From what I understand, a forbearance should not affect your credit score. Do I have to contact a broker to buy all the properties? If it is listed on the MLS, then you'll have to go through an agent. If it's not listed on an MLS, you can buy. Your buyer and seller does not need a realtor to make the deal happen. Have you ever invested in Fundrise? No. My deals are very, very profitable, so I've not had a reason to invest with anybody else. My deals are usually more profitable than other deals, so I don't need to invest with anybody else. Is a mobile home a good start to build assets? It can be. It really depends, because you don't want to go and jump and get a smaller property where that's actually holding you back from going after something bigger, to jumping to a 4-plex. So I always suggest go for a 4-plex. minimum a duplex, because otherwise you just be spending a lot of time on something that's not going to get you a significant return. What was your first property investment? That was a duplex. All right. Hi, Pascal. What are your thoughts on a mortgage forbearance? I am told by the lender it will not have an effect on credit. That is correct. It will not have a credit effect on your credit, but you will have to repay the money. So keep that in mind. Now, sometimes you are able to roll the forbearance back to the end of the loan, but we haven't had clear guidance on that. So I can't really tell you exactly what's going to happen because even the mortgage companies don't really know what's going to happen yet. But supposedly you're going to be able to move it to the end of the loan. Where am I from? I was born in Syria. I'm Aramaic. Am I your youngest fan? I don't know if you're my youngest fan, but you're 14. You're close. You're close. Probably one of the youngest. All right. Little Big Ray says, what is the difference between the MLS and Zillow properties? Nothing really. Most of the things on the MLS go to Zillow. Sometimes you can post something on Zillow that isn't on the MLS though, but that's not extremely common, but it can happen. You can also find properties on Craigslist as well and Facebook. When do you recommend to refinance your property? If you're planning to refinance a property, I'd probably do it now before it's too late because I don't think you're gonna be able to do it later. So, all right, guys, it looks like things are gonna be ending on IG. I'm on YouTube right now, so jump on YouTube. You can continue asking your questions. I'll see you guys later. All right, guys, on YouTube. You guys have been awesome. So, what questions do you have for me? Candy Apple says, damn. It was really awesome live event today. Lots of great questions. And I'm really excited about finally being able to come out with the course. It's taken me a really long time, but it's really great. I mean, taking me what, six to 8 months now to create the course, but it's almost here, and I'm really excited about it. Jasmine, how are you? All right, guys, got a lot of people following now. What questions you guys have for me? We're gonna go for probably another 15 minutes before we wrap it up. Peter, hey, Peter, says, hey, I don't know if you mentioned this before, but why do you think it'll take 1 year for the 10% drop? Peter, amazing question. So this is why. We have forbearances, 3, 6, 12 months. So between the time that forbearance is in place, how are you going to foreclose on somebody? In addition to the foreclosures that are going to come in 12 months to 24 months, the the real estate broker that I work with that specializes in foreclosed properties told me 6 months ago that in about 6 to 9 months, there's going to be a significant amount of foreclosures coming to market. Not people being foreclosed on, but people that were already foreclosed on, and that it's taking time to process the property to bring it out to the market for sale. So those foreclosures, I've seen more and more come onto the market recently, right, over the last few months. And those properties aren't selling. Those foreclosed properties are not selling, and they're getting price cuts. They're dropping. They're dropping $5,000, $10,000 at a time. There's stuff going to auction. After they go to the auction, people this is not an auction at the courthouse, but this is an online auction to buy foreclosed properties. They're then doing an inspection of the property and they're giving the property back. They're like, you know what, this needs too much work. They basically, I'm guessing they figured out that the prices are going to drop, and based on the condition of the property and how much work needs to be done, they don't want to take on this work, spend 6 months doing this remodel, and then have the property you're not be able to resell it because the prices have dropped. So I'm seeing consistent price drops, not significantly, but small price drops on these foreclosed properties. As time goes on, it's going to be more and more. As more of these deals come to market, prices are going to continue dropping. Commercial deals, they're not able to process them right now because the SBA is so backlogged with the PPP loans and the EPLI loans. In addition to that, a lot of these properties, when you're trying to buy a house or a multi-unit, the mortgage company right now is calling your employer 2 days before the closing and verifying employment. They're being very strict right now on who they're giving loans to. The whole market is tightening. And when that tightening happens, it makes it harder and harder to buy deals. So people want to buy real estate. The thing is, because the market's tightening with lending, with closing, deals are slowing down. It's creating a backlog, and it's going to cause prices to continually get compressed. And as these foreclosures come to market, when all these builders that are building massive amount of homes can't sell their homes, they're going to start selling the homes at cost because they have to cover their loans that they took to build the houses. So there's going to be a significant amount of properties coming to market, and the amount of people that can buy them isn't going to be there. So there's going to be a supply, and the demand will not be there. Now there'll be a demand of people who want to buy them, but they're not going to be a demand of people that can actually close on the deal. So a lot of demand or a lot of supply, little demand is going to cause the price to reduce. Great question, Peter. Dream Big says, how are you getting ready to buy 15 unit plus? Are you looking for them? Wow, the questions are coming in fast. Are you looking for them and looking for info on a Fannie Mae deals? So on a big commercial deals. So Dream Big. Yes, I've talked to Fannie Mae, Freddie Mac lenders for a while now. I can easily get the loans. So the loan's not a problem. I have the money for the down payment. That's not a problem. Right now, what's coming down to is finding a deal. And it's very hard to find deals. I have seen more and more properties come up for sale because I think a lot of real estate investors are like, oh man, I want to get out now before it's too late. So I'm getting prepared. I'm watching the market. I'm getting ready for these deals to come up so I can jump on them. So that's basically what I'm doing, preparing for the deals to come so I can buy them when they come up. Jasmine says, my question is, I'm considering putting the 2-family on forbearance and then selling it. I'm concerned I will lose value. Here's the numbers. I paid $130, currently valued at $215. I get $1,500 rent. So your rent is pretty good for your price. I would do one of two things. I would either do a cash out refi on the property and hold the cash because your monthly payment on that $170,000 loan isn't going to be much, and you'll still cash flow good. But if you don't feel that property is in a great area where you have significant appreciation, then it might not even be worth your time. So you might just want to sell it and take all your cash out and walk away and wait for another deal to come up. Now, again, if you live in the property, you might be able to do a cash out refinance and then get a line of credit so you could pull out all of your equity and then just sit on the sidelines and wait for another great deal to come up for you to get, maybe a couple of 4 units. Those are your options. Jasmine also says, it is not clear the tenant will pay their rent. I get $1,950 in rent. That is correct. During a turbulent time in the market, tenants sometimes don't pay. It was as bad as like 30%, 35% of my tenants weren't paying their rent when the market tanked. So it happens, and you have to be prepared for that. So even if you pull all your cash out, you might have to take some of your own money out of your pocket and pay the mortgage and to keep things going. So those are all different. Those are all different variables, but you can assess which way you want to go. It really dependent is the property going to be a great property owned over the next 5 to 10 years? If it's not, then you might just want to sell and wait for the great deals that should be coming in the next 12 to 24 months. Chad says, when running numbers on a deal, example, $799,000 sales price, 5119 mortgage, 5940 cash flow, not including washer dryer income and second garage income. What are your thoughts on these numbers? So $599 sales price, $5,000 a month mortgage. The cash flow doesn't look that good. What state are you in? Like the cash flow is not that great. I mean, you're telling me that, I don't know how many units are there, but basically it sounds like if one tenant doesn't pay, your cash flow negative. So it doesn't sound like an awesome deal. Doesn't sound like something you should just like jump on. But it depends, because if you're saying you're buying for $799, but it's really worth $1 million, that could be different. California fourplex. So, okay. So right now, like your deal, I wouldn't really be excited about this deal. Unless you can go buy it, do some value add and increase the rent significantly, then it might be good, might be worth it. But so if you can increase the rent to say $2,000 a unit, even if one is empty, you can still break even, which is nice, right? So yeah, I would, if you cannot easily increase the cash flow of this property to $8,000 a month, then I would be very careful about that deal. Jasmine says, so refinance or a line of credit? I think not. I would do a refinance and then do a line of credit on top of that if I was going to hold the property. Otherwise, I would basically just sell and wait for something better to come along. Jasmine says, thanks for the info, Pascal. Enjoy your evening. You too, Jasmine. Chad says, great info. Thank you. I'm planning on waiting 12 to 24 months, like you said. Yeah, 12 to 24 months, I think is a great idea for you to wait and study the market you want to be in, find a great niche in a downtown core area for you to invest in. I'm going to be coming out with a course in the next month. Pre-sales are going to come out in like a week. So that's going to be the foundations of personal finance. It's really going to get you guys educated to make sure that you're prepared to buy your investment property, and then 2, make sure you qualify for that loan, because you don't want to be stuck and not be able to get the loan because you don't have your finances in order. Peter says, will those future foreclosures be mostly off market or MLS? If off market, do you recommend any sources? Thanks, man. I think it's going to be on the MLS. I think they're going to be everywhere. I think they're going to be on like different, different, like auction.com. I think they're going to be everywhere. And these auctions are going to be auctions, not that you have to, a lot of them are not going to be, you have to pay immediately cash. I think they're going to be on auctions where then after the auction closes, you then have 30 days to close on the property. There's going to be a lot of those available as well. So I wouldn't be too concerned about missing out on these deals. Do some of the amazing deals get taken by the bigger investors? Yes, but there's still, it's going to be so many deals. I think that, some of the smaller players are going to be able to pick up the crumbs and still make a lot of money from that. Chad says, love the content, man. Gotcha, brother. Peter says, can you recommend any spreadsheets or online calculators to evaluate deals? It's just a simple pro forma. It's really just a simple pro forma is fine. I might include my pro forma in on the class that I'm offering and then my rent spreadsheet as well, just to kind of throw it in for you guys to have it. But I wouldn't overthink it. It's just making sure that your property cash flows and you have a significant buffer. Great question, Peter. All right, guys. I'm going to take one more minute, take on like one or two more questions, and then we'll call it a night. Well, I appreciate all the love. Thank you guys for all the thumbs up. I really like it. It really gives me a lot of positive encouragement to keep giving you guys all this value. Thanks for all the love. Please like, comment, share. And that's really appreciated. You know, that's kind of like the thank you you can give to me. A lot more good stuff to come. I think you can see how the page is constantly upgrading. The quality is constantly upgrading because I want to provide the most value for you guys. Peter says, for rehab, cost mostly. You're going to have to really do, there isn't really a calculator online for that because each market has different pricing. So what you have to do is build relationships with a couple of GCs and find out who you like so they can they can provide you the data for what something would cost for your market, because what it costs in Washington is different from what it costs in Florida, which costs in LA, which costs in New York. It's all different, right? So it's not that cut and dry. Chad says, thank you. Keep it up. See you next time. Thanks, Chad. All right, guys. Well, you guys have a blessed night. It was really great seeing you guys again, and stay safe out there.